Welcome to TradeTheMBA.com. This is John. This report is for December the 3rd, Monday. Well, Friday was not really that big a surprise. Again, we were right at these critical levels, 2731, which was the previous algo line that we had. We hit the magenta ABM, just a fraction below it, and of course closed right at the other algo at 2762 range. Let's see what the exact close was. We can put it on here, 64. So just 2 points slightly above. That's the white line number right there. So I think that also corresponds to the ABM gold, 64.75. So within 3 ticks of that from a daily standpoint. So that just shows you it's no joke that these resonant points where algos actually take effect have significance. Now, you can see from the buy signal that we finally have orange over green. However, green at negative 369 is greater than the negative 5 cyan, meaning the bullish run is still intact, even though you've had a significant closing of the bullish snake mouth, which would be the steel rising, orange falling, and the tongue being the cyan. That just got closed off. So that may limit some more momentum to it. We'll see, because you still have the bullish configuration there. A move of the red DOC long-term buyers above the negative 7 would certainly propel it much more significantly. So that's what we're going to be looking for. Plus you have this key resistance point of the 50%. That's going to create a little bit of headwind. That's right at the 75 level. So we'll keep that in mind, for at least from a Morganachi standpoint. That's where it resides. And the NASDAQ, a little bit weaker. Got a lot more room to go, which means if it catches fire, it certainly would be propelled further than I would expect. Then the 50% for the S&P would probably be broken unless it lags a little, which we may get a little more mean reversion as we get to the 50%, meaning both markets sort of start to move in the same direction, and then the S&P slows down to make up for NASDAQ. Though that's a little tough because a lot of the NASDAQ stocks are on the S&P, so. And the euro faded just a little bit. That could put a little bit of downside pressure. It was already an arbitrary little double bottom bounce, but you can see the immediate reversal of the orange. Now, this is exactly the opposite of what we're seeing from the daily S&P, because when that orange moves above the green, that is an indication that the long has failed, or at least has stopped its momentum play at all. You would typically look for steel to dip below cyan as a complete ending and actual stronger short configuration. No change in bonds, oils, likewise the same. We don't need to go around in circles. Gold's going to hold up where it is. The 5K. So this is where it gets beautiful when we start really paying attention to how detailed that DOC can really set the path. Because here we had the open of it, we were in this blue candle range, which tends to be a little bit bullish when it's starting a nice momentum run. Unfortunately, you can see that the orange popped above, but you had the green, so it was still bullish. But then the cyan right here popped above at this particular point, letting you know that the bull run was over, and that was all the way up at the 42 level. That's a nice, clean way to be able to see it. You didn't get a clean snake until all the way over here, which would be the steel crossing below, orange above, and obviously the cyan gets right in the middle with green below red. All those four, when they happen together or in very close concert, it's usually very strong, powerful signal. You can see it led to significant lows, at which point we usually look for the steel crossing back above cyan to kind of be a warning. Or if the steel is below when it crosses above red, and I point to that one a little bit later on over here on the right side of the screen, and we'll get to that one briefly. It was interesting because after this buy signal, the green pretty much stayed up until, well, right about here, and never really produced any clean short snakes. We had just a fraction of it right here, which is where it dipped to the 23, and then returned back to the same configuration where the steel crosses back above and you can see the green is above. You're just not getting any strong impetus because we weren't getting orange dips. We were just getting strong long-term buyer, and this was consistent with where we were at on that level because it was very close to that pivot range. If we look at it from the daily, right here, around the 35 range, 34.50 was the 23, 38%, I mean, and so that just had strength in the coalescence, and it's important to remember what those intraday conglomerations of support and resistance as it relates to the daily. I always like to look at them first thing, kind of, if necessary, you can put a line on your chart. That helps. And then we proceeded with gold candle that just continued to see rising red until we finally got a clean DOC spread with orange. And then this is what I was talking about. So the steel crosses right here on falling shakeout and a dip below the red line. Okay, that lets me know that this one's probably not going to be the end of it. But what happened is then you look for the steel to cross orange, and at this point it did it under an improved extreme histogram, not below the red line, and that was like a warning signal. Hey, could be done with it, and we still dipped further, which was interesting to have that take place. But it's key to point out, because you don't see a turnaround buy signal at this particular spot because it didn't have enough of the components. You'd be looking for orange to dip below. It wasn't until right here that orange dips below the green. That kind of like, that's the first signal. Of course, I'd like to see it below red, but at this point, once it dips below the green, then it's like boom, you've got green actually moving above cyan, and that puts the bulls in complete control. And then you do get the red, the orange below the red just a little bit later, and then we come up to a peak point where you end up crossing over again, and it was interesting because the orange crossed a little earlier than the steel, right back over here, and this what turned out to be the cross point of cyan moving above the green, which effectively ended the long setup once the cyan was above. Even though you still ended up with what you would be equivalent of the closing of the mouth here as the steel was rising, so you weren't expecting a whole lot, which ironically you didn't get, because it kind of held up pretty decent with that sort of a weak sell signal. But what really happened was that green got below red and really kind of stayed that way until we got much later on a new peak. And again, it was precursored with that steel crossing, nice bounce. It wasn't extreme oversold or anything like that, but this was a higher pivot than the previous one, which is why we started with a P2 here, and then the secondary one with the orange dip certainly had to be the buy signal, followed by a couple bars later cyan under red, which is always a buy. Even though we were getting positive extremes, it just means we know where the retrace is going to be. That doesn't mean the run is over, and you can see that run can make quite a blast. Even when we got the DOC spread right here with the steel so far under and still fading lower, wasn't an indication. Plus you also had, and I love to point this one out, in a run like this, when you start to see them, that magenta over the plus 15, it's not as strong. What you want to look for is the secondary highs that are much weaker below that negative 13 to look for short opportunities, like right about here at 59, and of course you can see that one dropped all the way to 53 effective, but at the end of the day we were still running a very strong reset, and that led to end of day dip below the red line, and it stayed consistent with that, creating new positive extremes. So just powerful when you're looking at that, and not to be overdrawn with some of the little things like this, because when I'm getting these kind of crossovers with the red still rising and that, and magenta above the 13, it's just not even interesting to want to attack, because you have the 15 and then you have the 25 here, and it just indicates that you still have the significant bull run. Not to mention we were rising gold. You can also look at it too, if it's above and you got falling gold, that's an opportunity play as well. It just usually doesn't produce a whole lot, so that's the key element in noting that spot of it. So all in all, good stuff. I'll continue to put up interesting tidbits or points that develop during the day. As always, though, trade well, and we will continue to rock the markets.